Hey, good afternoon. Alan Leza, Certified Public Accountant in Longview, Texas. Welcome to the third installment of Tax Tip Tuesday. We're going to talk about something that's festive and fun this time of year, and that is giving. And I think we should all give. And so I want to talk to you a little bit about itemized deductions and charitable contributions, because if there's some subtle changes, it's very important though, given the fact that itemized deductions in and of themselves are going to be changing. But let's focus on charitable contributions. 'Tis the season. First off, anytime you have a charitable contribution, quite honestly, at the end of the day, you need to have documentation. Depending on the level of contribution, as far as whether it's monetary or non-cash, also adds a little bit more emphasis as to what you need to have in the form of documentation. Start off by, if you have a cash contribution, $250 or less, you better at least have a canceled check. But the more documentation you have, acknowledgement, written letter, adds a little bit better support for your deduction. Anywhere from $250 up. Now, you really need to have acknowledgement in writing. One thing that I have found, and most recently just last year, preparing tax returns, was that churches sometimes don't put a simple disclaimer at the bottom of their acknowledgement. And it's just not churches, it's not-for-profits, other organizations. That's a very important piece of paper to have, and that disclaimer saying that you receive no goods or services is going to make a big difference as to whether that deduction is a bona fide deduction in the eyes of the IRS during an audit. So always make sure that you get documentation, even if it's less than $250. It's not required, it's just not a bad idea, but certainly more than $250, you're going to want a written acknowledgement of that contribution. Let's talk about if it's more than $500, a cash contribution, you're still going to have a documentation. You're going to be required to have a written acknowledgement. Let's turn over now to non-cash. Non-cash up to $500, you should have some form of receipt or substantiation for that donation. If it's $500 or more, you're going to have a written acknowledgement, and you're also going to have to fill out a form 8283. So when you bring your tax preparer a notice from Goodwill Industries, fill it out. It's just a blank form from Goodwill Industries or any nonprofit organization that you donate to is not going to be sufficient enough. Keep this in mind when you make that contribution. Have the general date of purchase, a general cost of what you paid for that, because your tax preparer is going to need that for the 8283, and then you should assign the fair market value of your donation. If you have that information in hand, you're going to have a lot of substantiation for that donation. Let's talk about bigger numbers. When you get up to $5,000, any charitable contribution, non-cash, $5,000 or more, you are required to obtain a qualified appraisal. And that means from a qualified appraiser. And he's going to charge you a fee, and you're going to need a stamped, signed report that you're going to have to attach to your tax return, Part B of the Form 8283, which supports your itemized deduction on Schedule A. Now, the good news is that charitable contributions previously have been limited to 50% of your adjusted gross income, and that's been bumped up to 60%. The bad news is, and I don't think for somebody that wants to be benevolent that this is going to really matter, but with the standard deduction threshold being increased to $24,000 for a married couple, it's projected that 90% fewer people will be itemizing. Some people are saying, well, if they're not itemizing, no one's going to give charitable contributions. I just don't really see that being the case for most people and want to help others. So just keep in mind the rules for charitable contributions. Obviously, make sure you do that prior to December 31st to be included in this year. Another thing to consider is if you think you have enough itemized deductions, or maybe not quite, to reach the standard above the standard deduction level, you may want to consider stacking. Maybe paying more charitable contributions this year and then maybe not being able to do it next year. It's just a matter of looking at where you're at with your itemized deductions. Hope this helps. Happy holidays, and help somebody out. Donate. Alan Leza, CPA. Thank you.